Hello, sir. Myself, Karanpreet Kaur, and my partner Jitu Atwani. We have a project on ICICI Bank credit risk, and now we are going to explain that what is credit risk and how this ICICI Bank manages the credit risk. Now, so credit risk. First, we have given the definition and then the meaning, like the risk of a loss of principal or a loss of a financial reward stemming from a borrower's failure to repay a loan or otherwise meet a contractual obligation. This is the definition of credit risk. Now, meaning. Credit risk are calculated based on the borrower's overall ability to repay, and this calculation includes the borrower's collateral assets, revenue generating ability, and taxing authority. Now, sir, the meaning of this credit risk is when a borrower takes a loan from a bank. So, a bank is always bank sees whether that person is able to repay the loans or not, and then when he takes the loan, then the borrowers give his collateral assets, and that collateral assets are valued by the bank whether that person is able to repay or repay the loans, and from where his revenue is generating. Now next, like ICICI Bank credit risk. Now this ICICI Bank credit risk is managed and taken care by the CRC and AD, which is Credit Compliances and Audit Department. Now this credit risk compliances and audit department, what they do when a person takes a loan, now they evaluate the risk at transaction level itself, and as well as in the portfolio context. Now this the types. Now the credit risk is seen in retail sector, corporate sector, and industry sector. These are the portfolio context, which as I have explained in the further slide. So these are the portfolio context which this is going to explain by my partner Jitu.
Hello, sir. Coming to the retail credit risk assessment procedure, here ICICI Bank take care of analyzing the credit risk on the retail sector. That is basically the retail loans which they provide, that is the personal loans, car loans, home loans, and also the credit cards. Here what they consider for analyzing the credit risk is the independent audit. They audit the documents of the individuals on a periodic intervals, just to see as how they are generating their revenue, what is their mode of business, and what the basically the cash flow in their books of accounts. And the other point is the credit scoring and strict monitoring of repayment patterns. As it is a retail sector, they don't have many other options of analyzing the credit risk. So what they do is, when they give an loan to the same customer again, what they see is his previous records of repayment of the loan. Now coming to the corporate credit risk assessment procedure, here the ICICI Bank basically looks upon the quality of its financial statements, its past financial performance, the financial flexibility in terms of ability to raise capital, that is how the company is performing in the market, and what is their ability to raise capital from the public sector, and which basically actually speaks about the IPOs, FPOs, and the secondary market. Now coming to the cash flow adequacy, just to check how the company is doing their business and how's the cash flow of the company. Now coming to the relative market position and operating efficiency, the way they operate in the market, the quality of management by analyzing their track record, payment record, and financial conservatism. That is nothing but the management and the employees and the way they work, the way they carry out their business, their ethicalities, their policies of carrying out business, and other things. Now coming to industry credit risk assessment procedure, here basically the industry characteristics such as importance of the industry to the economy, its growth outlook, cyclicality and government policies relating to the industry are taken care of, where ICICI Bank analyzes as to a particular industry or a particular organization which is carrying out business about something, or is manufacturing some product, or is providing some kind of a service, how important it is and what is its contribution towards the economy. And again coming to the competitiveness of the industry, as to what is their competitiveness, and the industry financials, including the return on capital employed and their return on investment and their operating margins and earning stability. This is basically speaking about the manufacturing sector and few other sectors, wherein they analyze their cash flows, the way of they carry out business, the competitiveness in the business, and the dynamics of the business, and what is the future of this business. So now coming to the other part, that is how ICICI Bank reviews its credit origination and how it monitors its credit. risk. So the origination of credit risk happens through designing appropriate credit processes, operating policies and procedures as to how they are going to create credit depending on the policies put down and the procedures they carry out to analyze risk and lend out loans. Review of large exposures in industries, corporate groups and companies, checking the credit rating of company structures. When they originate the credit, they also, before they lend loan, this is basically related to the corporate and industrial sector, where they check the credit rating of the companies and their structures as to how strong they are, and analyze and default risk and loan pricing. Review of industry sectors, this is again connected to the industrial sector risk assessment. Now continuing, the way they monitor their credit risk and their funds is monitor adherence to credit policies of RBI. There are a few credit policies laid down by RBI which are liable for every bank to follow, and if they strictly follow these policies, what RBI says is that there are good chances of maintaining optimum risk and there will be no high volatility in the credit risk management and portfolio monitoring throughout, and designing a methodology to measure portfolio risk, that is industry-wise or the corporate-wise or the retail sector basically, and developing a CRIS, that is credit risk information system, which would actually ensure and help a bank monitor their credit risk, and ensuring monitoring and follow-up by building appropriate system, that is basically the new technology implementations which they have, and keeping a track record of their customers, the corporate companies and the industries and all these things. Thank you.